We're joined by Michael Giordano, Portfolio Manager at Stone Asset Management at PDAC 2017. So Michael, can you give us a overview of the markets for this year?
Sure. I mean, the resource sector continues to do well. We have the TSX Venture that's up about 7.5% year to date, and it's up about 50% for the past year. So that being said, people are putting their monies in the resource sector. The fact that China has stabilized at 6.5% GDP growth, coupled with the fact that Trump and other global governments are trying to stimulate the economy with infrastructure plans, that bodes well for the commodity space. So I'm optimistic for resources once again for 2017.
Right. Now, a lot of people can get emotional when investing. How do you advise against that?
Well, you definitely got to take a long-term perspective because these companies, a lot of them are exploration, and they take anywhere from 2 to 5 years to discover something. So you definitely got to be patient. Maybe layer it in with some companies that are already in production and generating cash flows, such as tech resources of the world, and then you can get a nice diversified basket of resource companies.
Very good. Now on Twitter we had a campaign going on, and we had a question on zinc and your outlook for it. Can you give us comments on that?
Okay, well, zinc, it continues to do well, and I'm optimistic on zinc for several reasons. The demand side continues to be strong with galvanized steel as one of the main products for zinc. So we're seeing record auto manufacturing and auto sales, which is good for zinc, and we're seeing global infrastructure plans do well for demand. But really the key is on the supply side. We got tightness in supply. Inventories are at their lowest level since 2009, and that's because big mines such as Century and other well-known mines have shut down. And then we also had a big strike in northern Quebec from Noranda income funds, smelters, so that's taken a lot of supply out of the system. So that all bodes well for the supply-demand fundamentals for zinc.
Very good. Now also on Twitter we had a question on Cobalt. Is there a Cobalt company with proven management and good operations in a good jurisdiction?
Okay, well, Cobalt, I'm optimistic on Cobalt given the demand for both electric vehicles and batteries and cell phones and whatnot. Given that most of Cobalt is manufactured by some of the big metals producers, it's hard to find a niche junior type Cobalt pure play company. However, I do have one called Cruise Cobalt, CUZ on the venture, and this one here has about 8 projects in Canada, so totally mining friendly, safe jurisdiction, and they got one in Idaho and one in Montana, so they're all sort of early stage projects, but they're cashed up and they're ready to explore those projects, so that's the one I would recommend.
Right. Now moving on, are there any other commodities this year that you're bullish on?
Well, I do like copper because of the demand picture from the Chinas of the world and whatnot, and we've seen major strikes at BHP Escondida mine in Chile. That's the largest mine in the world, so that's taken supply out of the picture, and we've had strikes at Freeport's Grasberg mine in Indonesia. So once again, supply is kind of taken out of the system, and essentially you need about $3 copper prices to get some of these major projects up and going. So I'm optimistic on copper.
Very good. Well, thank you so much for your time today, Michael.
You're quite welcome.
To learn more about Stone Asset Management, you can go to stoneco.com. I'm Rachel Lee for Small Cap Power.